All right, guys, welcome to our TipRanks Friday market recap. It is June the 18th, and we have Richard Allen and I, where we'll be discussing some of the big topics that happened throughout the week and our different views and opinions on them. So make sure you hit that thumbs up button. Let us know your thoughts in the comments down below as well. Hey, Richard, happy Friday.
Hey, Julie. Hey, how's it going?
Good.
So much crazy news today, huh?
Yes.
And this week in general, yeah.
Yeah, absolutely. In fact, I'll just pull right up our table of contents that we're going to be looking at today. Elon and Bitcoin, once again, taking a look at DraftKings and Hindenburg, some inflation updates, as well as commodities, and some Lordstown motors. So jump right into this, hey? Elon and Bitcoin, once again, I feel like we talked about this last week. It's no surprise. It's happening again. So a couple things this week. We started off the week with this tweet, kind of alleging Elon Musk for a bit of a Bitcoin pump and dump, little manipulation of the stock, which is what we've kind of been mentioning the week before, that his tweets have such an influence. So he writes back saying that that is inaccurate, that they only sold 10%, and that when there's confirmation of reasonable clean energy, Tesla will resume allowing Bitcoin transactions. So of course, Bitcoin shot up, I think it was 12% between Sunday to Monday, just on this tweet. So we haven't had it again. Yep. Next, though, later in the week, we have this CEO saying that it's greener than he thinks. And he said, based on what data? Now we've seen the price slide again. So we've had quite the week. We're up above 40,000. Now we're back down in that 36,000 range. Yep. Does this surprise you? I mean, it seems to be the trend now with Bitcoin, hey?
It doesn't surprise me at all. The volatility is crazy. And that's what we were talking about with Coinbase starting to work with 401k providers. Yeah. And is it a good thing for people to have this in their retirement accounts? I think it is, as long as it's 5 or 10% at the most of your portfolio, because this wouldn't be good for somebody to peek at their retirement account and see such drastic moves on a daily basis. And it is on a daily basis. So
yeah, it's so true. And I think too, Bitcoin's been around for a while, but we're still in the infancy stages of it being so widespread and hitting the bigger institutional investors. So there are some more of these issues coming up with how green it is and all of those policies and such. So over the next couple of years, hopefully that kind of irons out all the creases. It becomes a little more, I don't want to say regulated because that's not the right word since they don't like the regulation, but just it has all that sorted out where we don't see it be influenced quite as easily from a single tweet.
Right. Yeah. Did you see another Bitcoin news? Did you see El Salvador actually deciding to make Bitcoin a national currency?
Yes. I've heard they're the first country to do that. I didn't read too much further in on it. I'm curious.
Yeah. They reached out to the World Bank and they said, will you help us implement Bitcoin into our currency? And the World Bank said no.
Oh no!
They're like, you're on your own. And I think we'll see more countries wanting to do something like this to, hedge against inflation and things. Sure. But you can't expect the IMF or the World Bank or something to go, oh yeah, we'll get rid of our money. Go ahead, use Bitcoin. So I think that's going to be the general rule over the next few years, that they're going to have to implement it themselves. And I don't know what sort of impact that will have on the world economy.
Yeah, and they'll certainly have to pave the way, it seems, too, right? They're not going to get help. So it's kind of, hey, El Salvador, let us know how you're going to do this. And I'm sure others will follow suit, but let's see how they do it first, right? Like learn from their mistakes or successes and just see what that actually looks like in practice.
Yeah.
Wow. I heard something, too, about China kicking out a bunch of their Bitcoin miners. And again, I didn't read too far into it, but I heard that they were cracking down and that there's an influx of these Bitcoin miners leaving China.
Crazy.
Yeah. And I should read more on it before I bring it up. I just kind of glanced at some headlines and saw that, so I didn't get too far into it, but
yeah, if anybody knows about that, let us know in the comments. Yeah. We are by no means crypto experts, but it tends to dominate the news pretty much every week.
Yes, right? Every day it seems there's something new. It's hard to keep up with all of it for sure.
Yeah.
On to the next, we have DraftKings and the latest victim of a Hindenburg report. So our infamous short selling company there. This one talking about black market operations. So I followed the SPAC of DraftKings a decent amount. It was the one that I'm excited about. I still think it's a big growing industry. I didn't realize it was a three-way merger with this SB Tech. So I guess the allegations here are that this SB Tech has some dealings in black market gaming, money laundering, and organized crime. And they're saying that about 50% of the revenue continues to come from markets where gambling is banned. DraftKings, of course, said that they completed a review and they're comfortable with their business practices and the findings. So they don't seem too worried. Looking at their stock price, obviously they took a big hit when the report first came out, right? At the beginning of the week, they're pretty steep decline. What I thought was interesting, though, is all of the analysts that have weighed in since. So DraftKings had some pretty bullish outlooks there. And then all of this came out. And in the last 2 days, so after this report has come out, we still have a ton flooding in with very bullish outlooks. I mean, we have one upside of 65% here. So it seems that people aren't taking, I don't want to say taking it seriously, but they're not too concerned with it, it seems, hey?
Yeah, Hindenburg, I mean, if you guys aren't familiar with what goes on with short sellers, essentially they put out a report, they take advantage of big volatility, of big drops in prices, and they can make a ton of money. We're talking millions of dollars over the course of a day when that happens. So these allegations could be completely unfounded. They could be based on hearsay or previous unhappy employees. And you've seen Hindenburg come out with those reports in the past that were completely unsubstantiated. So this may be a case of that. It may not be, but it tends to, you see that Wall Street doesn't seem to be too concerned about it. And I'm a proponent of DraftKings. I think the regulation and the gambling, especially in the US here, is beginning to be more favorable for companies like DraftKings and others. I like the company. I don't think we have anything to worry about, but that's just my opinion.
Of course. And I'm a big believer at looking at both sides of the coin always, right? You want to look at the good and the bad, but you have to consider your source. And so like you said, Hindenburg stands to obviously make a lot of money with these reports. Now, it's not to say that there isn't any bits of truth in their report, but it does make you a little more skeptical when looking at it. So it's a lot to comb through, and it always has that initial big downwards movement in the stock. But then, people kind of cipher through, decide how much they're actually going to believe. I mean, they were the ones who had the short report on Nikola as well, right? And that kind of exposed the truck rolling down the hill. We had Trevor Milton stepping down. They have had a report on Lordstown. They've been going through some troubles. So we have seen it have some impact, but I don't think it sticks in every case. And no one trusts these short sellers either when they do these reports because they know their motivations behind it, I think.
Right. And we'll get into Lordstown a little bit, obviously, at the towards the end of this video. But and with Nikola, they were correct in some cases. I think they did a report on Nano X imaging that wasn't right. I'm trying to think. There were a couple others that turned out to be wrong as well. But I really like the team behind DraftKings, and my largest investment this year was in SRNG, which is taking Ginkgo Bioworks public relatively soon. It's a very innovative company. So Harry Sloan and his team that took DraftKings and Skills public, I think they're a fantastic group. And I'd like to think that they wouldn't get involved in something like the black market and, SB Tech being involved in that. I'd like to think that that's not the case. And maybe I'm naive, but I am not currently invested in DraftKings because it got away from me.
Sure.
So I was kind of liking the idea that it was dropping in price,
so
I could scoop up some shares. Take advantage of it. But I guarantee you that Hindenburg had a short position in DraftKings the day before they put this report out, and they may have already closed those positions because it almost immediately rebounded. So
no, and like I said, it's kind of hit and miss. If they had a 100% track record that all of their previous reports have been dead on the nail, then we'd be a bit worried. But like you said, these companies do go through a lot of due diligence and regulations when doing these SPACs. So you hope that they would be comfortable with what's happening and stuff. So it seems analysts certainly aren't worried. The overall market, it's kind of been recovering a bit. So I think hopefully they'll come out of this one fairly unscathed in the long term, but wait and see what happens from there. All right, what did I left here on my? So next up, we get into inflation. You want to take this one away?
Yeah, absolutely. This dot blot, neither of us have any idea how to read this. So we're going to skip over it. But essentially, this is telling you what the when the Fed thinks rate hikes will happen.
Yeah.
And there are a couple people in the Fed that think rate hikes could happen as soon as late 2022. In fact, we have the Fed president from St. Louis coming out and saying, look, we like where the economy is headed right now. We like that the jobs market is picking up, and we could see or should see rate hikes as soon as late 2022. And that had a tremendous impact on certain sectors of the economy, especially commodities, metals, lumber, things like that. And we have some data to pull up here for you guys because corn prices soared, copper soared, so much it went crazy over the past few days.
I have a commodities. Oh, here we go. Commodity prices.
Yeah, like look at that. So copper up 8%, silver, platinum up 8% or down 8%. Gold, coffee, lumber, all these things. Lumber was last time we talked was up 300% year over year, and now it's starting to come back to reality. It's still up a ton, but corn, 21% down. So this is good for the food market, for instance, but it is not great in general for people in these industries that rely on this for their livelihood, right?
I guess my whole thing when it comes to the inflation, I think it can be a lot of noise. I think in the big picture, it's not necessarily a bad thing, right? It can be a sign of a recovering economy. We've had really low rates for quite a while now, especially going through this past year with the pandemic, very unique conditions surrounding the market. And of course, they weren't going anywhere near rate hikes during that time. So to me, I think this is almost a sign of recovery in that sense. It doesn't have me too panicked. I think this is all part of the normal economic cycle. We've always had that kind of fluctuation in those rates and everything. And, can also encourage people to stay invested in equities so that they're earning more than inflation, right? They're not going to have their money sitting around losing value. So I think people get scared when they first hear these words come out. We see that initial reaction in the market, but in the big picture, especially over the long term, it isn't something that panics me too much. The commodities, I will admit, I'm not as in tune with or in touch with there. I did read that China is opening up their reserves of some metals, and that's having an effect on prices as well. Did you read about that at all?
I did not, but I know they have a huge reserve of
I think it's mostly precious
metals. Yeah. Gold, platinum, palladium.
Yeah, aluminum and copper was in there too. So I think they were trying to control prices on their side. And of course, we're going to see that affect things on our end as well. Corn, I'm surprised, moved so much. I'm not quite sure why corn was affected the most out of all of those, but
and soy, and just not cattle in general, but hogs, and it looks like cattle, other cattle is going up, which is strange.
It's not the hogs. Again, anyone watching that has more insight as to why some of these would be more affected than others, I would love to hear, because it isn't a category that I watch super closely. So I'd love to get more insight on those workings.
I think the biggest concern with inflation is companies can't borrow money as cheap. So they tend to not spend as much on R&D. They tend to not grow as fast. So it can really, when a stock market is trading sideways for a long period of time, which we've seen, 10, 20 years of pretty sideways kind of boring trading, that I think would be super detrimental right now, because that's not what the retail investor is used to. I think they would just, a lot of people would pull their money out and not manage their own money, which wouldn't necessarily be a bad thing. I think we'd see less volatility in that. So we'll see how this all shakes out. But I think I agree. I think it's a lot of noise. It's a lot of headlines, like we talked about last week. This 5% year over year inflation is true to some extent, but it takes a lot of other factors into account, where you have food prices barely up year over year, and you have some sectors up 8, 10, 12%. So makes a big difference when you look at the microeconomics as opposed to the bigger picture.
And I think too, you made a good point with all the retail investors, because we have had a big influx of retail investors in this last couple of years with the pandemic, people being at home, having more time to do that. And that was not a regular market, right? We had the giant drop off with the initial the pandemic. We had insane recovery from there. So on that micro viewpoint, looking at just this past year and a half to 2 years, people were a little spoiled for a bit. And now we've had a bit of a pullback in these last few months, which has gotten people a little bit more nervous and such, but it's all part of the big cycle. So depends, I guess, if you're looking short or longer term, but yeah, longer term, it'll all work out.
Yeah, I agree. And I think, if you're a new investor out there, you haven't gone through these downturns.
Yeah.
And a lot of people, because of what happened in March and April last year, a lot of people see these downturns as an opportunity to buy more. And I think that's a good thing as long as you're investing in the right strong companies for the long term. So if you're going through this for the first time, rest assured, we'll get through it together.
Yes,
it'll be okay.
Exactly. That's what I say in the red weeks. I'm like, just kind of don't look at your statements or your accounts. If you're not planning on buying more, then just let it be, ride it out. Just try to turn an eye. It'll be way less stressful than watching it every single day. But,
yep.
All right, next up, what do we have? Oh, now we get into Lordstown. Their stock has been on quite the ride. I'll move us over here so we can see. Starting the week off up about that $13 point. Dropping down, we've had some volatility. So this started all with them talking about their ability to stay in business for the next year, saying that there was substantial doubt about that ability, that they're pretty much running out of money and might not have enough to begin commercial scale production. Following that, we have their CEO and CFO resigning, stepping aside, making some changes there. But before that, they came out saying that they did have enough cash on hand to get through next May and enough binding orders. But they then had to backstep on that, kind of correct what they said.
They don't have binding orders.
Yes, these binding orders are not actually binding.
Oh, man.
They had to clarify that, saying that, the vehicle purchase agreements provide us with a significant indicator of demand, but they're actually not binding. So these people aren't locked in to these prices. So it's been a heck of a week, and their price shares reflected. Like we said, they also had the Hindenburg report on them back a few months ago now, I guess.
Yeah.
A lot going on. What do you think? Is this a company that you have followed? I mean, they had a lot of buzz with Workhorse, right? So I feel like a lot of people had their eyes on Lordstown.
Yeah, no, I followed it along with a lot of the other EV companies when the SPAC craze was going on last year, and I did some swing trades on Lordstown, and I made some okay money, but I was never a long-term investor. I just didn't. I think it's pretty common for, if you really dig into these companies, to see that they don't have binding orders. There's been some other companies that have done it in the past. And that most people don't know that. They'll be like, hey, we have orders for $2 billion worth of trucks.
Yeah.
And that's just, and you dig into the purchase agreements, and they're non-binding agreements.
Yeah.
It's just like, we'll maybe
I could be interested, right?
Yeah. And that's, I think that's what's scary about some of these SPACs last year. It was really a craze to bring any EV public or any EV company public because of how Tesla was doing, and NIO and some of these other EV companies. And it was kind of a mad dash for these SPACs to grab these companies up, and Lordstown got kind of pulled into that. And I think, I forgot if it was, Workhorse purchased they own 10% of Lordstown, right? And they were going to use their factory. Now, when Workhorse lost the USPS contract, that was bad for Lordstown as well, right? Because they're in a massive old GM facility, huge facility. And if they had those binding orders, and if Workhorse was going to be able to have that USPS contract, it would have been great for Lordstown. But when all of that stuff fell through, it wasn't looking good at all. Yeah.
That was a big turning point for them, I think. Obviously Workhorse, but also Lordstown Motors in turn. They have a great concept. Like we said last year, everyone was so gung-ho with all these EV companies. We can see that it's going to be the trend of the future for cars. but now I think it was Elon Musk who like was quoted saying it's easy to build a prototype of an EV, but actually building them is a lot harder. And now, after all this hype has died down, we're starting to see who can actually bring these out commercially and start producing them. And that's where we're starting to see some people falter, if you will, right? This is where the strong are now actually going to survive. And these ones that didn't actually have fundamentally maybe as much, funding there that they needed, starting to show. And this has just been hit after hit to Lordstown. And there's still some people out there who are maintaining hope. And I don't know, like you can get that management change, great, but they're going to need a lot of funding here and like some capital raises and stuff. So it could be a rough next year or so if they can't really turn that around.
Yeah, I made a video the other day and I mentioned them potentially doing a stock offering, and I got a lot of ha-ha-has in the comments.
Oh, really?
People are like, nobody's buying that stock offering.
True.
And
right,
I wouldn't. That's just, I don't know. It seems like a terrible time. Do you think the management change is a good thing, or do you think these executives are just trying to save face and leave while they could? Because they made a ton of money. Both of these guys, the CEO and CFO, made a great deal of money when the company went public.
Definitely.
So it worked out for them for sure.
Yeah. Now, I did a video on this way back when this was still like SPAC, before their merger completed. And I think there was a little bit of controversy in some of their leaders' previous businesses and how they were left, and with some unfulfilled promises. So I remember that there were some red flags around management. I don't want to say much more because I don't remember the details, so I don't want to say anything incorrect.
Mm-hmm.
But I know people are not necessarily surprised that this has happened again, kind of with this management team. So I do think bringing in new management could be a very important factor here. It's just whether the company, I don't want to say too far gone, but can they turn that around, right? Like, has the damage already been done? What position are they in? Can they actually turn this around and start bringing these vehicles out commercially? So I think it's a positive thing. I don't know if it's positive enough.
Right.
Basically.
It's gonna be tough because I don't know who's going to give them a loan, right, to continue production, or who's going to order vehicles now. And that's why you see companies like Rivian, doing really well, partnering with Amazon, because they have legitimate production facilities and real contracts. And so there will be winners and losers in this. Arrival, a European company, is partially owned by USPS. So that's a company that will probably do well as well. And they have some production facilities here now. So we'll see. There will be winners and losers. And it's not just going to be one big company taking all the market share. There will be some little ones winning as well.
Absolutely, right? It's like we don't only just have Ford and GM. We have a ton of different automakers out there. And the EV space will be similar, a lot of different niches. I was going to draw similarities to Nikola, and they went through the Hindenburg, they went through Trevor Milton and everything. And, they're still plugging along, right? It's yet to be seen how successful they are, but their stock's not at zero. There's still some people hanging in there. So it'll be interesting to see now. Lordstown, I feel like, is almost mirroring this. We had the Hindenburg report, we had the change of management, all of this happening. So I think we'll see some parallels between Nikola here and Lordstown, possibly.
At least they have working trucks, right? They don't have to roll them down a hill.
That was, when that came out, and their rebuttal was like, well, we didn't claim it was self-propelled. It's like, okay, come on. I remember reading that and being like,
I think that's assumed, buddy. Yeah.
Right. Like now when I watch car commercials, I'm like, is it actually driving itself though? I shouldn't assume that, right? Apparently that's a ridiculous assumption to make.
Yep.
Yeah. Oh, always something interesting.
What a mess.
Yeah.
I don't know. We'll see. I agree with the Nikola. It's not gonna. I'm surprised every time I look at the share price of Nikola, and there's still people investing.
Yeah.
I'm surprised.
Right? Yeah. We'll see what happens there. But I think that was most of our big topics from this week. I'm excited to see what happens next week. We'll have as much juicy drama happening with all these stocks and companies, or would love to just have a boring week where everything is green, nothing happens, but that is not the stock market now, is it?
Not now. No. Back in September? Yeah, absolutely.
Right? Everything was just up. Good to go.
We'll get back there. We'll get back.
Yeah, exactly. All right. Well, that'll be it for Friday. So thanks to everybody watching out there. Make sure you leave your comments down below, that you're subscribed to the channel. Richard, have a great weekend. And we'll see you back here on Monday.
You too, Julie. Thank you.
Okay. Bye.